question is of transfer pricing. What they are saying is KVS Limited, the assessee has sold goods on 12/1/2020 to L Limited located in a notified jurisdictional area for rupees 10.50 crores. So now in case if a person is located in a notified jurisdictional area, so if a person is located in NJA, then it will be deemed to be associated enterprise. It will be what? Deemed to be associated enterprise. It is deemed to be associated enterprise. And the transfer pricing provisions will be applicable accordingly. So here all the provisions relating to determination of the arm's length price will apply. So they have sold the same to 10.5 crores. And during the current financial year, KVS Limited charged rupees 11.50 crores from AG of New York and 12 crores from KP of London for sale of identical goods, and both of which are neither the associated enterprise of KVS Limited. Now here, they have charged 11.50 crores and 12 crores to the unrelated parties. This is the comparable uncontrolled price method. We see similar prices have been charged in respect of the identical goods. They are not situated in any NJA and they are not associated enterprise. So this is what the comparable uncontrolled price. While sales to AJ and KP were on CIF basis, now they are selling the goods to AJ and KP on CIF basis. Now here, KVS Limited, this KVS Limited is selling goods to AJ and KP. AG is of New York and KP is of London, and the goods are sold on CIF basis. Goods are sold on CIF basis means cost of insurance and freight, the same is included in the price so charged. But when it is selling to its associated enterprise here is the L Limited. So the sale to L Limited was on FOB basis. Now it is on FOB basis. Sale to L Limited was on FOB basis. Okay, so here the freight charges are included. The freight charges are included. When the sales are made to unrelated parties. So when freight charges are included, price would be higher on that account. Okay. So we have to make necessary adjustments to arrive at the arm's length price. And here the freight and insurance amounted to 20 lakhs. Paid ocean freight. Now L Limited has paid ocean freight amounting to 20 lakhs from purchase of KVS Limited. So what is the price charged from independent parties? Price charged from independent parties. Independent or unrelated parties, you know, one is AJ and one is KP. From AJ, the price has been charged 11.50 crores, and from KP it has been charged 12 crores. 12 crores KP. So this is, the price which has been charged. We have to make the adjustment of freight. India has DTAA with USA as well as UK. The assessee has policy of providing after-sale support service to the tune of 14 lakhs to all customers except Air Limited, which procured the same locally at a cost of 18 lakhs. Okay, so they have procured the same at a cost of 18 lakhs. compute the arm's length price of sales made to L Limited and the amount of consequent increase if the of the assessee company. So they are asking you are to require to compute the arm's length price. So first of all here, we will be reducing the ocean freight and insurance charges to make it comparable. Ocean freight and insurance charges, since sale to unrelated customer is on CIF basis, whereas sale to associated enterprise is on FOB basis. So here, to the tune of 0.20 and 0.20, this will be the ocean freight element that will be reduced. Then less the amount on account of after sale service, because they are charged after sale service, whereas in case of L Limited, it is itself borne after sale service. The amount of after sale service, after sale support service provided to all customers other than L Limited. Okay, and here the assessee has provided the same to the tune of 14 lakhs to all customers. So 0.14 and 0.14, the price to unrelated customers would be higher on that account, therefore we have reduced it. So this works out to be the arm's length price. That is 11.50 minus 0.20 minus 0.14. That is 11.16. And in this case, 12 minus 0.2 minus 0.14. That is 11.66. So here, by CUPM, more than one arm's length price is arrived. So we have no option. Normally only one price is arrived, but more than one arm's length price is arrived. So we can take the arithmetical mean of such prices. This is the only option left for us. So plus 11.16 divided by 2, the arithmetical mean works out to be 11.41. Whereas price charged from L Limited, that is our associated enterprise, how much amount has been charged from L Limited? That is 10.50 crores. 10.50 crores. So in this case, the income to be increased will be 11.40 minus 10.50, that is 0.91 crores. Here, this much amount of income will be increased. So this way, we can do the, this particular question. So this was of 6 marks which has been asked in this examination relating to transfer pricing. Now next question is of computation of the book profits. Here Mahadev and Sons Limited is a public company whose accounts have been prepared in accordance with the provisions of Schedule 3 of the Companies Act. Its P&L for the year ended 31st March shows a net profit of rupees 27 lakhs. And the company informs the following debits and credits have been made in P&L account before arriving at the above net profit. So here these information has been provided, the debits and the credits. Net agricultural income, that is exempt under section 10(1). So here that same will be reduced while computing the book profits. No adjustments will be made of the profits of industrial undertaking covered under covered and qualified for deduction under 10AA, because exemptions of 10, 11, 12, the same will be available, not 10AA. Then amount withdrawn from reserves created in previous year 18-19, book profit was not increased by the amount which was transferred in the year of creation of reserve. So in case this book profits was not increased at that time, then there was no MAT liability would have arisen that time. Now this amount has been withdrawn from reserves, the same won't be reduced here. Then LTCG on sale of equity shares on which STT has been paid, no adjustment will be required. Amount withdrawn from revaluation reserve, the same can be reduced to the extent of disallowance of depreciation on account of, say, revaluation. Then here, expenses related to 10AA undertaking adjustments won't be there. Depreciation for 18-19 and business loss relating to previous year 18-19. So depreciation or business loss, whichever is lower. So here this is lower, the same can be reduced. Current year's depreciation, that will be added, and depreciation excluding revaluation will be reduced. Interest paid to bank, not paid to interest to bank, not paid up to the right filing of return, no adjustment will be required. It's an ascertained liability. Provisions for unascertained liabilities will be added back. Income tax will be added back, and penalty for infraction of law, adjustments won't be required for the same. And depreciation for current year includes 5 lakh on account of revaluation. Here we are required just to compute the book profit. So very simple questions, not very hard. So here, computation of book profits. So it's computation of book profits. What is the net profit? As per profit and loss statement is 27 lakhs. Net profit as per statement of profit and loss. Net profit as per statement of profit and loss, that is 27 lakh rupees. Okay. Now add items. Look what can be added here. Number one is here depreciation relating to previous year 18-19. So depreciation, unabsorbed depreciation or business loss which is lower will be reduced. But both have been debited. Therefore, depreciation unabsorbed relating to financial year 18-19, that will be added back 13 lakh rupees. Okay. Add depreciation as per Companies Act. How much amount of depreciation is there as per Companies Act current year? 12 lakhs. Then we will be reducing less depreciation excluding revaluation. Depreciation excluding revaluation is how much? 5 lakh is towards revaluation of assets. So depreciation excluding revaluation will be what? 7 lakh, the same will be reduced. So we are looking to the debit side. We have discussed about this. No adjustment will be required. This we have discussed. This we have discussed. This we have discussed. Then interest paid. Interest to bank not paid. No adjustment will be required. Interest to bank not paid up to due date. It is a ascertained liability. Ascertained liability. No adjustment will be required for the same. Then provision for unascertained liability, the same will be added back. Add provision for unascertained liability. Okay. That will be added back 3 lakh rupees. Then we have seen that add income tax paid and provisions thereof, it is to be added back. So what is the income tax paid? 6 lakh rupees. This will be what? Added back. Income tax paid 6 lakh rupees, it will be added back. Then penalty for infraction of law, no adjustment will be required in respect of what? Penalty for infraction of law. We are not computing the income as per the provisions of the Income Tax Act. We are computing the book profits. The penalty for infraction of law. Okay. Then this item you can also write expenses related to 10AA undertaking. Expenses relating to 10AA undertaking. It is subject to MAT, no adjustment will be required. Then about these items which are credited, less here net agricultural income, net agricultural income. It is subject to MAT. It's not subject to MAT as it is exempt. As it is what? Exempt, it will be reduced. How much it is? 1 lakh. It is 1 now, 11 lakhs. It is 11 lakhs. Next we have profits of industrial undertaking covered under 10AA. Profits of industrial undertaking covered under 10AA. No adjustment will be required. Same is subject to MAT. Then amount withdrawn from reserves. It won't be reduced. Amount withdrawn from reserves. Since book profits were not increased in the creation of reserve. In the creation of reserve. In the year of what? In the year of creation of reserve. Hence, same cannot be reduced. Same cannot be reduced. When it is withdrawn, when it is what? Withdrawn and credited to P&L account. So it cannot be reduced here. Next is about what? Long-term capital gains on sale of equity shares. LTCG on sale of equity shares. We cannot make any adjustment on that account because same has not been provided. Now LTCG on sale of equity share STT paid is taxable. Then amount withdrawn from revaluation reserves. Amount withdrawn from revaluation reserve. From revaluation reserve to be reduced to the extent of disallowance of depreciation on account of revaluation. Disallowance of depreciation on account of what? Revaluation. How much depreciation has been disallowed on account of revaluation? It has been provided 5 lakh rupees. So this 5 lakh rupees, to the extent of 5 lakh rupees, it will be what? Reduced. So these were all sorts of adjustments as we think. Now here, this will result you in what? Giving the book profits. So basically this is the book profits now. So it is 27 lakhs plus 12 lakhs plus 13 lakhs, sorry, plus 13 plus 12 minus 7 plus 3 plus 6 minus 11 and then minus 5. Your book profit works out to be 38 lakh rupees. This is book profits. So this question was asked for 6 marks. You can verify the calculation aspects. This way you have to make the adjustment to compute what? The book profits. Presentation, present it according to the explanation 1 to section 115 JB. So this was one question relating to computation of book profits.